Hello everybody and welcome back. This is Swati Gupta, Chartered Accountant. We have recently started live sessions and therein we have started a new chapter that is consolidation. It is a super hot topic and I hope you will like this video. There are many parts of the same which have been uploaded on the YouTube channel, so check them out. In case if you are interested in learning with us entire subject, or if you are looking forward for attending live sessions or recorded sessions, then do make sure you put a quick text on the number given on the screen, that is 90966 and get all your queries resolved. Thank you so much. See you inside the course. Good morning. Good morning. Is my audio video clear? Okay. Okay, let's start our today's session. From today onwards, we are starting consolidation. Okay, it's the first question that will be asked in your diploma in IFRS exam. It's a 25-mark question. It deals about group accounting. Whenever there are multiple entities which is governed by single parent, or you can say holding company, or an entity which has majority stake, okay, then generally these companies are grouped together and are known as group entities. Now the parent of the company, or you can say parent of the group or holding of the group, has a responsibility to provide a financial statement, okay, which consists of all the figures of these subsidiaries. So this is why we are required to understand group accounting, because as per these rules, as per these provisions, we will be understanding how to prepare consolidated financial statements. Okay, before we go ahead, we'll learn about small terminologies. Okay, the important terminology, how it impacts your PL and balance sheet, and then we'll go ahead with some question answers and examples in order to understand its implication. Okay, all set till here? Please give me a quick thumbs up. Everybody, all set? Good.
Did
What
I
about
miss anything?
no, we've just started. We've just started. This is our first slide wherein we are talking about like what is group accounting and why we are studying. We're studying group accounting because as an accountant, we are required to prepare consolidated financial statements, okay, on the behalf of parent company, or you can say holding company. Okay.
Yes.
Okay. Now, there are multiple criteria given in order to identify whether that connected company is your subsidiary or your associate or your joint venture, or it's just like an investment. Each and every type of entity, firstly we have to identify its relationship. Secondly, the accounting method is different with whether it's an associate, joint venture, subsidiary, or just an investment. Okay, so the accounting treatment is different. How do you identify whether it's subsidiary, associate, or investment? It has its own definition right now. Just understand that there are multiple types of situations, multiple types of relationship. It can be a subsidiary, it can be an associate, or it can be your investment. If we talk about from the perspective of parent, it can be its subsidiary, it can be its associate, and it can be its investment. Okay. Now, IFRS 3 and IFRS 10. IFRS 3 and IFRS 10. We'll be reading these both first and then we'll go ahead with other standards. Okay. IFRS 3 tells you about business combination. Whereas IFRS tells you about CFS, Consolidated Financial Statement, CFS, Consolidated Financial Statements. Okay, so business combination will tell you about the relationships and all. Okay, when it's a subsidiary, when it's associate, when it's an investment. Whereas IFRS 10 will tell you how to go ahead while preparation of your balance sheet and PL under consolidation for group entities. Okay. So herein there is a huge definition given which has multiple pointers, circumstances, and if you look at the bare act, okay, if you look at the bare standards that have been introduced by the I would say IASB, okay, they have multiple illustrations, multiple scenarios, examples in order to, I would say, explain these definitions. Okay, so we'll pick up some important pointers, okay, and concise the definition and read the definition. Okay, to identify a subsidiary and a parent relationship, there should be control. There should be control. Without control, we cannot say it's a parent and subsidiary relationship. Okay, in order to conclude, in order to understand, in order to go ahead with consolidation, okay, we are required to identify their relationship. Control is the factor, is the super important factor, is the basis, is the criteria on the basis of which you determine whether it's a parent and subsidiary relationship or not. Okay, if parent has control over subsidiary, if control exists, then we'll say it's a parent and subsidiary relationship. Whenever we identify it's a parent and subsidiary relationship, we always follow, we always apply full consolidation method. There are different methods. We always follow full consolidation method. Now, what is it? How does it differ? We'll read afterwards. Okay, once we understand these terms and all, then we'll later take an example and understand what does full consolidation actually means. Okay. So, in order to determine whether it's a parent and subsidiary relationship, control is the criteria, is the basis. Okay. Next, if it's a parent and associate relationship, this means how will you determine that it's a parent and associate relationship? In that case, you have to identify whether there is significant influence or not. See, control, significant influence has their own definition. We'll read about it. But as soon as you have identified that significant influence exists, then in that case, we'll ascertain, we'll conclude that it's a parent and associate relationship. Whenever we ascertain that, okay, parent and associate relationship exists, under consolidation, we follow equity method of accounting. Okay, we follow equity method of accounting. What is it? We'll learn later. Okay. Next, it's not a subsidiary, it's not an associate, but it's an investment. Company has invested into the equity shares of another company. It's an investment. Then in that case, we do not record it under group accounting as either subsidiary, associate, joint venture, etc. Instead, it is just recorded as investment. As investment, your financial asset. And therein we have to record it as financial instrument. We are required to record it as financial instrument. This is simple overview. Okay, this is simple overview. Each and every terminology we'll be reading. Okay. Any doubt till your type of investment? Good question. Good. Harishankar, any doubt till here?
No doubt.
Okay. Okay. So on the if control exists, you'll say it's a parent and subsidiary relationship. If significant influence exists, then it's a parent and associate relationship. Okay. If there is only an investment done, which does not determine either control or significant influence, okay, then in that case, you will treat it as an investment. If it's a subsidiary, you go ahead with full consolidation method. If it's an associate, you go ahead with equity method of accounting. If it's an investment, then you have to apply financial instrument standards. Now, in order to determine control and significant influence, there is nowhere mentioned percentage holding. Please write it down somewhere that percentage holding criteria is not the basis to determine whether control is there or not, whether significant influence is there or not. In your entire IFRS and Ind AS, there is nowhere mentioned that percentage of holding is the basis onto which you decide whether there is control or significant influence or not. But it's a general practice. Even your questions will give you a situation on the basis of percentage holding. So it's a general practice. Please understand, please mark it as a star. It is not given into the standard. Standard does not prescribe any percentage holding basis as a criteria to determine whether it's what is the relationship status between this parent, subsidiary, associate, investment, etc. Okay, among the group entities, what is the relationship status? Percentage holding is not the criteria. Percentage holding is not the criteria at all. Okay, it has not been stated in any standard, neither in IFRS, neither in nor in Ind AS. This is a general practice which is followed in your questions also and in our real life also. Sometimes this practice is followed generally, I would say. Now, what is it? It gives you a guideline in case no other information is available, or in case on the basis of those information, if you are unable to identify, okay, the relationship status among the group entities, then you can go ahead with the percentage holding criteria. If the percentage holding is greater than 50%, this means there is an investor and there is an investee. Okay, there is an investor and there is an investee. Investor, the person who is making an investment, and there is an investee. Investee is the entity into which the investment has been done, acquisition has been done. It can be like 1% shares, it can be like 100% shares. Okay, there can be partial acquisition, there can be full acquisition. Okay, so if investors holding, we are talking about investors holding. If investors percentage of holding, if the amount of shares that have been acquired in investee, okay, if it's more than 50%, if percentage holding of the investor is greater than 50%, we say control exists over the entity, over the investee entity. Control exists over investee. Okay, control exists over the investee entity, the entity in which the investment has been done, the entity of which equity shares have been acquired. If percentage holding is greater than 20% but less than or equal to 50%, then we say there is a significant influence. Then we say it's a significant influence. Okay. If percentage holding is less than 20%, if percentage holding is less than 20%, then in that case, we say it is just an investment. There is neither control nor significant influence. Okay. If control over entity exists, then we'll classify it as subsidiary. If no control exists, but only significant influence exists, okay, we'll classify it as an associate. Okay, and holding is less than 20%. If it is neither control nor significant influence, we'll consider it as a financial instrument. Or you can say financial asset. Any doubt till here? Make sure when you are practically applying it, okay, in with your clients and all, please make sure that you never quote that percentage of criteria is the basis onto which you make this decision. Okay, never. It's just a general practice. It's not mentioned in any standard. Hari Shankar, any doubt till here?
Clear.
Clear? Good. Okay. Okay. Also, have you noted? Kishan noted? Any doubt, Kishan? Okay. Okay.
No doubt.
Good. Good. Okay. Now, next, we'll talk about what actually is control. Control has three important pointers. Control is a very huge definition. It has so many examples. I would say 20 plus examples, 30 plus examples are there. In order to explain whether control exists or not, there are different situations given in order to clarify if control exists or not. Okay, the concise definition of control has three important pointers. Okay, point number one is power to direct relevant activities. Firstly, if the investor has power to direct, has, I would say, privilege, okay, is given an authority to provide directions, to provide instructions related to relevant activities, then we'll say control exists. We'll say control exists. Now, what are relevant activities?
To be continued. The further parts of this lecture have been uploaded on YouTube. Do make sure you check them out. Also, in case if you have any sort of query, or if you are interested in attending live session or get access to recorded session, then please drop a text on this number given on the screen, that is 90966968807, and you'll get answer to all your queries. Okay, as you can see, it's a live session wherein one to one question answers are taken, queries are taken, so it's super beneficial to get connected and attend these types of live sessions wherein hand holding is given. We will be solving many examples and questions alongside in the session itself. Okay, which is going to be very helpful in preparation of your diploma in IFRS exam. See you in the next part of the video. Till then, take care, be safe, stay tuned.